Folks, this one stock is set to print endless millionaires by the end of 2025. I'm going to present everything about this stock, its business model, its industry trajectory, its proof of concept, and ultimately let you be the judge. And by the way, folks, this is a stock that Nvidia itself has a massive stake in. So if they're invested in it, you know it's not something you want to sleep on. And the only thing I ask in return for all of the work that goes into making a video like this is that you hit that like button. And also don't forget to subscribe. Every time you do those things, YouTube pushes this video out to more folks, and it helps us out tremendously. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Okay, so we need to start with thy holy APLD. APLD, in my opinion, continues to be one of the most extreme opportunities right now to create generational wealth. Probably the most extreme since Palantir. April 24th and the following weeks, I made videos screaming that APLD was a buy. It was originally at $4.53 when we made that video screaming about it, and I projected it going back to the top end of the channel, breaking out to the $11 to $12 region. But here's the thing, I was wrong. I predicted the stock was going to go super high. It actually went extremely high. If you were planning for a 2x and now you have a 3x, well, you may be like, what the hell, Charlie? I have too much extra money now. My ex-wife is going to adjust my alimony payments, Charlie. What the hell? Folks, this is simply what happens when you buy good assets at good prices. I also want to give a shout out to options players on this. We alerted July 18th expiry calls at about $1.08 earlier this year, and as of this morning, those shot up to $5 at highs. Almost a 5x, right? Now, obviously, disclaimer, look, this is a top winner. This isn't like an everyday result type of thing. Options trading is risky, McRisky, and you could lose your entire buy-in. Why utilize options? Well, if you don't have endless money in your account and you want to actually leverage the money that you have, well, on very high conviction stocks with momentum, it can make a lot of sense to play options. And by the way, if you never want to miss an alert and you want to get all of our options alert, you can now do that with ZipTrader Plus Discord membership down below. Anyways, what do I see happening next to APLD? Well, look, I think it's inevitable, if not by the time you watch this video, then by the next week or so, that the stock is going to have a big down candle. And people are going to say, oh, I never really believed in it. That's a scam stock now. Charlie is an idiot. But respectfully, folks, we like the stock in the first place because we believe the numbers suggest that this stock will eventually earn $93 by 2028. So yes, it's very nice to be able to play options with that long-term conviction in place. And it's very nice to have that conviction to buy dips or ride momentum with the idea that, yeah, no matter what happens, we still see it long-term going to $93. But still, if you bought this around our original video when it was at $4.53 or so, or you bought it at $5 or $6 or $7, well, you've now had a double or a triple. So it's simply prudent to take some profits off the table. I do think that long term, though, if you play this right with the right call options and the right buy the dip strategy, you could see upwards of 100x before all is said and done. Remember, I'm not saying the stock is going to 100x. I'm saying that if you play the right call option and the stock does what we think it will do over the coming years, well, you could see a position that 100x's. Okay, now AVGO/Broadcom. This is another play that has been absolutely exploding. Sergi McSergi, we alerted 250 strike calls on this at about $1.32 on April 16th. And as of this morning, they made new highs at about $26. This is one of the most extreme winners the last couple of months. And that's why playing call options on really big mega cap stocks that might not move as much as the smaller ones can be so useful. Risky, but useful. Again, not everyday results, but going from $1.32 to $26 between April 16th and now, really nice. So think about this. If you agree with our $382 price target on this stock that we believe it's going to hit and earn by 2028, well, what does to stop you from playing the options and leveraging these moves? That's the whole mindset I have with options positions. Next, UNH. So UNH, in my view, is a very big opportunity that people are simply sleeping on right now. And they are sleeping on it because they are worried about PR. But bigger picture, this company encompasses the largest health insurance company in the US, and it has the largest market share and market capitalization in the US health insurance industry. And it has endless folks in Congress that have bought the stock over the past few quarters. Last night, I posted my price target forecast for the stock on our Zip Plus Discord, and I believe we are going to see premium growth and increased market share due to recent investments and the new change of CEO and other leadership. And I think that's going to push the company to $400 billion in revenue. In that category, I believe their health services and analytics divisions are going to push up to $250 billion. I believe government healthcare contracts will be around $150 billion. And that's going to put total revenue at about $800 billion, motivating the stock to a price of $1,280 in 2030. $1,280. Today, the stock is trading at about $299. That means to me that if you're focused on what the stock is doing today, or, oh no, it just went down huge, well, I think you're going to be missing out on a huge opportunity. But let's say, Charlie, you know what? The FUDsters, the fear, uncertainty, and doubters, well, they're right. We are only going to get moderate growth in health insurance because suddenly health insurance isn't going to grow anymore. Well, we're talking $857 price target. Still well over a double from current prices. What about bearish scenario where the duopoly that is the health insurance industry all of a sudden magically gets new competition? Yeah, right. But let's say we're in la la land and that happens. Where do we see UNH trading at? Well, $586. So again, well above where we're at currently and probably beating the S&P 500 if we get to that price. What about MU? So we alerted this guy at roughly $1.08 on April 17th. Now it's run to $7.63 at highs. Roughly a 606% increase alert price to highs. Again, not everyday results. This was over a long-term time horizon and not everything's going to run this much. We're in a very lucrative market opportunity environment right now. But remember, MU's in a very key segment right now. They design, manufacture, and sell advanced memory and storage solutions. They're a key component of computer data centers, smartphones, and AI-driven technologies. And these are sectors that are very hot in demand right now. So it makes sense that this is skyrocketing. I think you're going to be surprised to see this continue to brew overall momentum into the coming years. Now, again, if you'd want to make sure that you never miss an alert, you get all of our alerts, our price targets, morning briefing, so on and so forth, well, make sure to get into the ZipTrader Plus Discord with that first link down below. Okay, lastly, I want to break down a new stock that is absolutely skyrocketing right now, and I believe that you're going to hear more and more about over the coming months and quarters. CoreWeave Inc., CRWV. This is a stock in a huge momentum cycle right now, and be warned, it's going to have a big cool down period, so don't be like, oh, I'm going to buy, but you need to have this in front of your attention because this company is actually a much bigger deal than you might think. And if you play this move with the correct strategy, buying at a dip, a large dip in the momentum, utilizing options and having a time horizon that encompasses at least 12 to 24 months, I think you're going to be very surprised by the results. It looks like a meme stock at first glance. It came out of nowhere and started skyrocketing billions of dollars in market cap. But this is a Gen AI play with staying power that is tremendous in terms of a big picture potential. So what exactly is CoreWeave? Well, CoreWeave runs GPU-packed data centers to supply the surging demand for AI computing power. The company's focus on high-end chips and cloud infrastructure has caught the attention of many major tech players. CoreWeave is what's called an AI hyperscaler, a cloud platform specialized for accelerated computing. It gives businesses and research labs on-demand access to supercomputing power for AI without them having to build out their own costly data centers. With AI applications exploding, demand for GPU-based computing is through the roof, and CoreWeave's niche is delivering that power at scale. Enterprise teams that find traditional clouds too expensive or slow for AI workloads are turning to players like CoreWeave. It's basically like Amazon Web Services for AI. If you're a company and you want to offer AI to your customers, but you don't want to pay for massive data centers, well, this is the way to go. They provide the heavy-duty chips and infrastructure needed to train and run your AI model. Now, CoreWeave already has a huge GPU fleet. CoreWeave has deployed hundreds of thousands of NVIDIA GPUs across its data centers, and since its founding in 2017, it's built a growing footprint of data centers within the US and Europe to host said chips. By the end of 2024, it had over 250,000 NVIDIA GPUs humming in its servers, making it one of the largest holders of AI hardware out there. This matters because the more GPUs you have, the more capacity to serve the AI gold rush. CoreWeave isn't just serving startups, by the way. Microsoft, Meta, IBM, and even hedge funds like Jane Street have used CoreWeave's cloud for their AI needs. CoreWeave essentially rents out its data center capacity to help power the AI ambitions of these giants. When companies like Microsoft or Meta need extra oomph to train models, CoreWeave can step in. I would say in a nutshell, this is a rent a GPU type of business. CoreWeave's model is very straightforward. They buy and set up tons of high-end chips and then rent out that computing power via the cloud. Revenue comes from customers paying for GPU hours or dedicated clusters to run AI workloads. It's a capital-intensive model, yes, because GPUs aren't cheap, but it addresses a critical bottleneck that many firms need AI compute, and CoreWeave lets them access it on demand rather than spending millions upon millions up front. Now, the company is experiencing blistering growth. Revenue growth has surged 420% year over year. If you look at the consistent scaling up through Q1 of 2024 to Q2, Q3, Q4, and now Q5, it's been very consistent, very predictable, and very beautiful. Long-term committed contracts provide strong revenue visibility, attractive unit economics, and is enabling a success-based approach to capital investments that are matched to customer contracts. At the same time, adjusted EBITDA is also climbing very steadily with a margin percentage of 62%, and revenue backlog is up 63% year over year, while capital expenditures is heading down. The company even expects over $5 billion in revenue for full year 2025 at the current pace. Few companies this size are growing this explosively, and that's why so many people in the markets are paying attention to this. CoreWeave has also attracted serious heavyweight investors during its pre-IPO fundraising. Asset management giants like Blackstone and Magnetar Capital led a $7 billion private financing round, and NVIDIA itself owns about $900 million worth of CoreWeave stock. This company is also getting big contracts, which means big confidence. OpenAI's multi-billion deal to use CoreWeave shows end user demand from top-tier AI labs. Microsoft signed a long-term CoreWeave agreement. And I mean, you can just keep going down the list. There's a lot of major companies that are signing big contracts with CoreWeave. The numbers speak volumes, triple-digit percentage revenue growth quarter after quarter after quarter. And yet, unlike many high-growth tech players, CoreWeave is not just growing users while bleeding cash, it's also improving its margins at the operational level. High adjusted EBITDA margin, 60% plus, suggests the business has inherent profitability once scaled. If management can navigate the heavy investment phase, which it looks like they will, well, this company is going to be printing dollars. So anyways, bottom line here, CoreWeave is a high energy bet on the backbone of the AI revolution. It's rare to see a young company so central to a major tech trend, but that's what's happening right now. So prediction, I think you're going to see this stock dump after this original discovery momentum cycle. Probably it's going to dump back to sub $100, and then you're going to see a very, very long normalization period where this runs up to projections that we have just sent out to our ZipTrader Plus members in the Discord at over $500 a share by 2030. I think it's pretty damn clear if you just look at the bigger picture here. This one is going to be a big benefactor of the AI wave. The only thing is that, yeah, it's in this big hypey discovery cycle, and I don't like the idea of buying in when it's up this much, this fast, and it literally just got here on the market. But it is going to have a dip cycle and probably going to happen in the next few weeks. So that's why you need to be aware of this stock. And we're going to keep you updated, and we're going to alert options when we do see it as a great buy opportunity. And we're going to be making lots of videos as well, so make sure to stay tuned. Join us in the Discord to get alerts, subscribe to the channel, write us a nice comment down below, let us know what you think about this stock, and we'll see you in the next video.